Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multi-asset and multinational hedge fund. By multi-asset, I mean we actively covering our positions in multiple asset classes, which include commodities, agriculture commodities, base metals, foreign exchange, and respective. By multinational, I mean we covering our positions in multiple locations like United States, European Union, and Asia Pacific region. But like I repeated many a times, and I would continue to repeat that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our fund. Treasury Consulting and our subsidiaries do not invite any investment from any third party. Today, I would like to cover a bank, rather the largest public sector bank in India and one of the largest banks we have in India. I hope you got the guess, and the title is State Bank of India. This video is as of 7th November 2022, and I am taking the live prices of State Bank of India from the market. As we speak, State Bank of India is around 600 plus, which means one stock of State Bank of India is around 600 rupees plus. And that is really a surprising element for me because the balance sheet of SBI is not supporting the 600 rupees. But before I move to balance sheet, I would like to correct that I am a person of intrinsic value. In the last 2 to 3 years, I consistently covering intrinsic value on my YouTube channel. I strongly believe that every stock, commodity, base metal, probably anything has to come to its intrinsic value. This is the universal principle, and no one can run away from that principle. In fact, in United States or you take any other country, whosoever flew much higher in the air, he went down on the ground. This is a ground reality. To substantiate my point, if I look at Paytm, Delivery, Policy Bazaar, and the latest is Intellect Design. Intellect Design is one of the mid-size IT companies we have in India. And as we speak, Intellect Design is approximately 440 rupees. You please open your trading software or anything and check the historic prices of Intellect Design. You would yourself get to know that where exactly Intellect Design is standing. And I know that thousands, rather millions of investors who bought Intellect Design only because of the hype, like you have Happiest Mind, Intellect Design, Emphasis, Persistent Systems. These all mid-sized IT companies around 6 to 7 months ago, they got substantial hype from the media. Substantial hype from the media, and even at that point of time I was very clear that this hype has to come to an end, and now this hype is almost moving towards an end. So I am a very strong believer of intrinsic value, and I would continue to believe intrinsic value. To me, if I am investing in any market, whether this is gold, silver, platinum, it would be agriculture commodity, equities, foreign exchange, I first look at intrinsic value. Of course, like I said many times, intrinsic value is a mathematical equation that we need to learn. It is a mathematical equation, which I mean to say it cannot be derived without any mathematics in picture. So if you are driving using mathematics, you are bound to win. This is what I would like to say. And as we speak, State Bank of India, which is trading near about 600, is beyond intrinsic value. And like you know me personally, that I am a person of statistics, which means that I speak when I have statistics ready with me. I never make any videos until otherwise I do not have statistics with me. The next part, I would be covering the statistics which I downloaded from the internet. I repeat, which I downloaded from the internet covering State Bank of India. We all know that the Indian banking system, whether this is private bank or whether this is public bank, except foreign banks, they all are facing the non performing asset issues. But the credit has to go to Indian media that the non performing asset issue never comes in picture. I haven't seen when was the last time the Indian media specifically wanted to cover the non performing asset issues. This is something which I am very, very clear and very, very straightforward. I haven't seen that. But yes, I have seen enough time when the same Indian media gave hype to loss making companies, and and the investors lost so much you can't even count. I downloaded one article from the internet, and this article is saying the list of top 3 public sector banks who wrote off bad loans in financial year 21, which means 1 year ago, because we are mid of financial year 23. In fact, not mid of financial year 23. We should say we are 5 months done with the financial year 23. So basically, this data is 1.5 years ago, I would say, 1.5 years old data. SBI wrote off near about 34,400 crores. You heard me very right. 34,400 crores worth of non performing assets. While UBI, which is Union Bank of India, phased out around 17,000 crores worth of non performing asset. Punjab National Bank phased out around 16,000 crores worth of non performing asset. As per Reserve Bank of India report, the reduction in the non performing asset through write offs by public sector bank in financial year 21 is 1 lakh 32,000, approximately 1 lakh 32,000. In financial year 20 it was 1 lakh 76,000, approximately. We should be very thankful to Reserve Bank of India for allowing these banks to write off the non performing asset, because once you are writing off the non performing asset from your balance sheet, then you are fooling investors that your NPA is coming down. However, the hard reality is that NPA is nowhere coming down, rather, you are phasing out your non performing asset. I repeat, only in financial year 21, the NPA write off is 1 lakh 32,000 crores, while in financial year 20, it is 1 lakh 76,000 crores. So, congratulations to Indian public sector banks. I once again congratulate Indian public sector banks for phasing out such huge amount of non performing asset And thanks to Indian media for not putting this into the picture. I downloaded another statistics which is specifically talking about State Bank of India. Specifically talking about State Bank of India. And these statistics say that State Bank of India write off 1.45 lakh crores. You heard me very right, guys. 1.45 lakh crore worth of non-performing asset since financial year 14. An interesting fact is that State Bank of India refuses to share the names of the parties who covering this non-performing asset. So the article goes like that. State Bank of India has again refused to share the names of the borrowers who owe 100 crores or more, even with its shareholder. Congratulations. Over the past 9 years, which means financial year 14 till financial year 22, State Bank of India wrote off around 1 lakh 45,000 crores. You heard me very right, guys. 1 lakh 45,000 crores worth of NPA. And do you know that how much did they recovered? Out of 1 lakh 45,000 crores, they recovered merely 20,000 crores. Merely, which is 13% of that. 13%, which means mathematically speaking, 83%. 83% of, I would say that money, is wasted. And whose money it is? It's a taxpayer money. Common sense. It's not the SBI money. It's a taxpayer money. The stubborn refusal to share information by SBI and the other public sector bank, according to the article, is surprising since they have no problem with the confidentiality when it comes to small borrowers. All lenders regularly publish recovery advertisements in the newspaper with the personal detail and photos of the small borrowers. But when it comes to big borrowers, big corporates, they always have a confidentiality problem. Many people, including the RTI activist, who always want these big defaulters to be public, but the bank always refused to mention the name. As we speak, on 7th November 2021, the SBI, when it is trading near about 600 rupees, I strongly believe that it is much beyond the intrinsic value. Much beyond the intrinsic value. I still remember when TCS, which was hyped by Indian media, that it would be touching 4,500 and something like this, all these vague predictions. And millions of investors entered in TCS, assuming it would be touching 4,500 after the buyback. You check my YouTube channel at that point of time also, I came in public domain and said that whether TCS balance sheet is supporting that buyback or not, that is the first big question. So before you are swimming with the hype, you first check the balance sheet of TCS and see whether the balance sheet does support such a huge buyback or not. This is what I said at that point of time. But you know that 99% investors chase media. 99% investors chase media. End result, as we speak, TCS is around 3,200. And TCS touched the low of around 2,800 as well. And I'm sure that millions of investors would have, you know, cutted their positions, winded up their positions, and took the losses in their books. And the credentials go to our beloved Hindi media. As we all know, that the Federal Reserve is hiking the rates. The meeting which ended last week, they hiked by approximately 75 basis point. which absolutely means, I repeat, which absolutely means that, you know, they are approximately between 4.5 to, they are reaching very closer to 4.5, very closer to 4.5, I can say. The beauty of the game is, I would say, the beauty of the game is that Reserve Bank of India is now forced to hike the rates because Reserve Bank of India left with no option. That is one thing which is very clear. Because Bank of England, European Central Bank, Federal Reserve, they hiked the rate by 75 basis point each. 75 basis point each, which effectively means, I repeat, which effectively means that it is putting a pressure, rather a huge pressure, towards the Asian central banks, which includes Monetary Authority of Singapore, Central Bank of Philippines, and respective central bankers of Asia. And they are forced but to hike the rate. They love it or they do not love it. That is a separate problem. In this eventuality, India may see a sequence of non-performing asset and which is unabated in nature. Because common sense, if the interest rates continue to hike the way it is hiking right now, it would put a tremendous pressure. I repeat, it would put a tremendous pressure on the the borrowers, basically the small and medium term corporations and other participants, that they won't be able to handle this. It would also put pressure on the real estate industry, pressure on the manufacturing setup, and all industrial activities who are dependent on the borrowing. You know, in this eventuality, I see that the interest rate hike will end up as a huge non-performing asset wave in the India. Huge. Since foreign banks in India are very, very, very vigilant as far as the lending is concerned. And more importantly, their portfolio in the lending is very limited also. That is also a very tactful fact. The majority funding in India is done either via the public sector banks or via the private sector banks. If you are thinking that the private sector banks are not phasing out NPAs, then you are extremely incorrect. They do. Please check Google, improve your understanding. In this eventuality, considering the hike in interest rate, and God forbid if Federal Bank would be hiking by another 75 basis point in the December meeting, which is also not far as we speak, we may see a trigger in the fall in the banking sector worldwide. And this is happening as we speak. JP Morgan Chase, Goldman Sachs, and Wells Fargo, Bank of America, all these leading banking institutions, they either started cutting the jobs or they put a total freeze on the fresh hiring. And I'm telling you that this would get replicated in Asia also. But in any case, I hardly bother that what people are thinking, because I know that when you make a forecast like you did in 2018, people always laugh, they always disregard this. But when this forecast turned true, then people realize that. Similarly, when I said about intellect design, persistent system, emphasis, and all these mid-size IT companies, people not took seriously. Today, the same intellect design is at 440 rupees. 440 rupees, and please check yourself where it was. Anyways, this is Rahul Magan from Treasury Consulting Group. You knew my personal number 9899242978. I repeat 9899242978. Thank you guys, and have a great time ahead.